Welcome to the pre-market insight for May 7th, 2020. Let's take a look at the charts.
Good morning, folks. Good morning, folks. And we're taking a look at the the S&P 500 futures, and we're coming in up just about 40 points, 1.43%. But more importantly, what I want you to be aware of is where are we opening our price into. Now, if we zoom down just a bit to the lower time frame, just so you can see this a bit more clearly, we have been stuck in a very clearly defined range after having this downtrend to close the week last week from a high of 29.65 to a low here just of about 27.70. We had a very nice bounce into Monday and Tuesday. But since then, we have formed this very tight range between an absolute low of just at about 28.24 that we set yesterday evening in the post market after the close, and the high of Tuesday's high here at 28.88 on the ES. Currently, look at what we're doing. We made a high yesterday of 28.86 on the ES, and we're now gapping up not above but beneath those prior highs, which is not necessarily a good bullish setup if you are looking to go long here, because all of the price appreciation has already happened in the pre-market. In fact, if anything, this open here is probably high risk to reward short opportunity, possibly back into the middle of the range here to 28, just around 28.55. Had we, however, gapped up above yesterday's high here at around 28, call it 28.84, then that would have been a very bullish setup to the upside to test this 28.90, call it Tuesday's high, and then looking for a retest of these levels here at around 29.20 on the ES. So this morning we had some more job numbers, and we have just at about another 3 million or so claims added to the already just at about 20 million or so from the past give or take 5 weeks. And we are being told that that is actually an understatement and an underreporting of the actual numbers. So we know that the actual economic situation in terms of employment is not very bright. However, we spoke about, and we speak about this continually, you also have to get out of your head and what is being reported, because the stock market is not the state of the actual economy. It is actually a discounting mechanism and a marking up mechanism based on future estimates, based on the future sentiment of how things will be concerning the companies that are within the particular index. And so in this case, we have this continuing disconnect because we have both the liquidity and the support put in by the Federal Reserve to help stabilize and bolster markets that is currently stopping the, perhaps the free flow and the fair flow of price discovery on its own. The market is being understopped, undergirded, backstopped. Some people call it the Fed put. And so what we have to understand is this is the reality that we are facing. This is the market environment that we're a part of. And so we still, in those market environments, have to figure out how do we extract value. Well, in this case, as we said, we're not gapping up above these most recent highs, we're gapping to them. So I would expect a bit of orderly selling, probably back into the middle of the range, to entice buyers to come in, to perhaps then go ahead and break the top of the range here at 28.90. And why am I talking more about the bullish rather than the bearish side? Because, again, look at what the price response has been continually just this week. Of course, we had the very bullish response on Monday. We had follow through and continuation on Tuesday. But even when we had a bit of selling coming into the end of the day from this high here at around 28.90 down to 28.55, call it, we have not had any follow through to the downside. In fact, in the overnight session on Tuesday evening into Wednesday, just the very opposite happened. we found buyers at a higher level at around 28.42. We pushed up, we made a higher low, yes, clearly we made a higher low at 28.84. And then again, we had selling coming into the end of yesterday's session. That took us down to make a lower low here at just at around 28.40. We pressed just a bit into 28.25 in the after hours, but we have not had any follow through at all to even test the highs of this small range that we had here on Sunday going into Monday morning at around 28.10. This is the reality that we're facing. This is the aggression on the bid. For whatever reason that it is, the aggression is on the bid. So there's no reason to fight the tape in this respect, and we have to respect that particular nuance in the market environment until and unless it changes going forward. So let's see what today's session brings. If we do fail here at 28, the pre-market highs are around 28.82, and we revert down to 28, call it 50 that we have in the past prior sessions, look for a retest of yesterday's low to come into action. And if yesterday's low does break, then we have the level down at 28.10 and 2800 that we saw in pre-market trading on Sunday evening into Monday morning. Let's take a quick look at a couple charts. Take a look at TLT. So you can see here, TLT broke below, if we zoom down to the lower time frame that we've been talking about, the higher time frame that we've been talking about on TLT. TLT had this very clear level of balance here between a high of 166, a high of 166.42 and a low here at 163.48. And we broke into that range, and we spoke about the fact, how do you trade the rules of balance? Provided that we come back into balance and we close there, there is the opportunity to go directly all the way to the other side of that balance, or to test the other side of the range. And so from the moment that we broke and held 166.42, we're now moving to the other extreme of the range here and made a new low yesterday at 162.05. Now, given that we do have a lot of consolidation in this area, it might be, depending on your bias, a good asymmetric risk to reward opportunity to look to go long TLT here with your stop just at around 161.50 to the downside. Let's take a look at gold. Gold is building out value at higher levels. We spoke about this earlier on in the week. You can see quite clearly we have a very nice area of consolidation here between just the low at around 1680. We've been talking about the importance of that 1680 level going forward, and a high here, an absolute high of 1788, but the range high you can say at about 1754. So we're actually building value between this 1680 level and 1754, provided that the range holds, because we know that price only goes from balance to imbalance, trend to range bound. Provided that the bottom of the range holds, this is a good opportunity to attempt to go long gold, back looking for a retest into the 1754, and possibly, if we do have some aggression coming in on the bid, into 1788. To the downside, I would not be looking to short gold on weakness. Rather, I would be looking for a retest at least to the very middle of the range and look to see how sellers respond to those higher prices first. Shorting into the hole in these sorts of equity and commodity markets is just not a good idea. Let's take a look at Netflix. Netflix, beautiful ascending channel, as you can see here, very clearly highlighted on my charts. Beautiful ascending channel on Netflix. We're coming up to test the top of that channel at this point, so I would be looking to probably trim some longs and take some profits into any strength later on today. Looking for possibly an opportunity to get long back into this 425, 426 level. We do have, of course, the absolute high just set about a couple of weeks ago at 449. Pre-earnings, I would expect that to be tested, not necessarily this week, but in coming sessions next week, if we do continue to consolidate in the wider indices and to build value at higher levels in Netflix. Lastly, we'll take a look at Apple. Apple, not everyone's favorite stay-at-home stock, but quite frankly, one of the strongest strongest stocks in the market and a market leader definitively. So you can see here we have on the 4-hour just a bit of resistance coming in at this 303 level on Apple, which lines up with some former levels of interest to the upside that we could not necessarily break out of back in earlier on in February. So there may be some profit taking here in Apple to the upside if we do get above and hold above 303.50, and perhaps we can see some follow through to begin pressing into the middle of this range here at around 312. Keep it simple, smarty. Protect your capital, deploy it consistent with your account size, risk tolerance, time frame, and investment objective. Be safe out there today, guys.